Hi, Scott here. Hope you're going well. So I'm going to put together a few mini lessons about certain subjects which will hopefully help you navigate these early days in your trading progress and make things a little bit clearer for you because there's a lot to learn and it's good to hear other people's perspectives sometimes as to what they think, and therefore it might cement it more in your head how things actually work. So what I thought I'd cover today is currency index is for the various currencies. Each currency has its own index: the dollar, US dollar, the Canadian dollar, the Australian dollar, etc. And these can be useful, not always, but the reason I'm covering that today is because of the US news yesterday that made the US dollar really weak. So that seemed like a good opportunity to actually make you aware of these currency indexes and how they can be useful for you. So I will share my screen, of course, and I'll show you what I use, what they are first of all, and how I use them. Okay, so there are 1, 2, 3, 4, there's 8 of them, one for each of the currencies. The big daddy, of course, is the DXY, called the Dixie sometimes. It's the dollar index or the US dollar index. And this is the one that most people watch because that has a big effect on all the markets to some degree. Now, one thing to point out is the other indexes for all the other currencies, they're obviously very dollar weighted. That means that you'll notice, let's look at the DXY first. We see on the daily, it's been an uptrend for a long time, like the weekly and the monthly, very strong. And that's sort of rolling over a bit. And yesterday was a very big down day. The daily sort of topping out. And then after yesterday's news, a big drop. Now you'll see that all the other currencies, to some degree or other, are the inverse of this. So to some extent, it's not very useful for the other currencies. Here we can see weakness in the US dollar. Okay, that gives us some kind of thesis of where the US dollar is right now and where it might go in the next few days. But if we quickly flick through some of the other ones, well, first we go through, there's AXYs for the Australian dollar, B for the British pound, CXY for the Canadian dollar, E for the euro, J for Japanese yen, SXY for the Swiss franc, and ZXY for New Zealand. So quite easy to remember. So just remember this formation of it rolling over and a very bearish day yesterday. So I'm looking at the daily. The hourly does work, but it's not really that useful. So we go to the Australian dollar. You'll see it's the inverse, basically, almost exactly. So what does that tell us about the Australian dollar? It's obviously the US dollar. It's not really much we can get from it. Maybe it's a little bit stronger than the US dollar was weak, showing there is some Australian strength there. But there's not much else we can really get from this information. British pound, that's pretty much the exact inverse of the US dollar. Maybe, if anything, it's a little bit weaker. You'd expect it to be a little bit stronger, and it's not that strong. So maybe the British pound is a bit weaker compared to the other currencies, as well as, of course, the US dollar. The Canadian dollar, again, very similar, rolling up, coming up the steps, and then a break above the daily 50 here, looking very inverse to the US dollar. The euro, again, very similar, but this one has broken above the daily 50 a bit more. So we can see the euro probably has been having a bit more strength recently. Japanese yen. Now, this hasn't broken the daily 50 yet, but there's a massive day yesterday. Because obviously, well, what happens with, I don't cover fundamentals much, but the yen has a different, their government have a different inflation policy to pretty much the rest of the world. Right, they're not raising rates. So therefore, it seems to act differently than the others. And we had a really bullish day yesterday, a massive increase there. So this big spike up is showing us the Japanese yen is strong, which we can see from today's charts. Right, we've been through the charts. You can see that it's pretty strong. And this is another one that's very strong. It's the Swiss franc. Again, it's daily 50 been holding it, and then it's really strong yesterday. And the Kiwi dollar, pretty much inverse the US dollar, a bit of strength. Okay, so that was just a quick lesson to show you what these are, what these currency indexes are, how you can use them. You can't get too much information out of them, but they can be useful using the right context. And that can help you sometimes with your currency pairs, which ones are strong against, always play strong against the weak, or the weak against the strong if you're going short, because that'll give you that edge. Okay, how you found that useful? I'll speak to you next on the next session. If you've got any ideas, drop them in the Slack channel and I'll cover those topics for you. Okay, take care. See you.